everybody, and welcome back to another episode of Bulletproof Practice. And today, it's Peter. We're reunited again, and it feels so good, like the song says. But we've also got our friend Chandler from LiveOak Bank, and I'm a huge fan of LiveOak Bank for many reasons. So, Chandler, good to have you here.
I appreciate you having me on.
So let's get right into it. Everybody's saying, like, banking, what's going on? Aren't rates going through the roof? Isn't this the worst time in the world to be talking about your banking needs? And right before we hit record, you said something interesting. You said that your rates for dental are right back to where they were pre-pandemic. Can you unpack that for us? Because we thought rates are higher than they've ever been now.
Mm-hmm. Yeah, absolutely. So, it's not beyond us that within the media today, you're seeing rates rising at historical rates that we've seen before, back to the 1970s. So what I was telling you guys right before we push record is that here at LiveOak Bank, our rates are getting back to where they were pre-pandemic. So think 2018, 2019. Rates right now for us are in the 5 to 6% range, and that's what they were pre-pandemic. So still,
let me just pause you right there. By the way, because there's a narrative, and you're right. If you're listening to the mainstream media, you're like, rates are living at 0.75%, blah 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 blah. And you got to remember, like, when you look at a 30-year rate chart, we're still really, really, really low. Mm-hmm. So Peter and I, we had podcasts back September, literally a year ago, saying, even though the administration was saying inflation's not really there and we're not in a recession and blah, 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 blah. We were beating on the drum of like, hey, check your rates, make sure you're, for those that are in adjustable rates and things like that, or prime plus one or whatever you have, this is a time to shore up your rates. And, proud to say we were right about that. Peter and I took action. Many of our masterminders took action. But for those that didn't, it's not too late. When you pull up that 30-year rate chart and see where rates are, yes, they've come up from their amazing lows, but they're nowhere near where they have been historically over 30 years. So for those people who are just kind of kicking the can down the road, this might be your last ditch attempt. No one has a crystal ball, but if I were to be betting, I'd be betting that rates are going to go up in a year or two.
Yeah, and that's exactly right. And so what I tell my clients a lot is, obviously we're back to pre-pandemic rates, but also rates are historically low, and this is a 20 to 30-year investment.
Right.
You know what I mean? So when you extrapolate that over 20 to 30 years, you're investing for that. Right. And so whether you get 100 basis points off or 150 basis points, that shouldn't make that big of a difference right now. They're historically low. That revenue that you're going to be able to drive with this new practice or this new location, it's going to exceed what that rate you're going to be paying today. So it's historically low, and it's still a good time to borrow.
So we got introduced to LiveOak through a bunch of connections. I have a friend who works there. Peter, you have a friend who's high up in the executive team of LiveOak, and I just want to tell the listeners about what LiveOak is, your campus. I mean, I call it a campus. I've never been there, but I just want to hear that story again, because it's so cool from a culture fit, because we're used to, having these huge banking relationships, and you're just a number. I want to hear a little bit about LiveOak, if you don't mind.
Yeah, absolutely. So background story, LiveOak Bank started up in 2008 as a niche SBA lender. So small business administration, we're focused on government guaranteed lending. So when we originally started, we only lent to veterinarians looking to do expansion projects, buy a building, ground up construction. And then in 2010, we introduced our healthcare division. So our CEO still today, Chip Mahan, when he started this bank, what he decided was there's a three-legged stool, right, in business, right? You got your customers, you got your employees, and you got your shareholders. Well, in publicly traded companies, right, usually the shareholder comes first, right? Because we're trying to make profits, we're trying to give dividends out. Well, he flipped that around, right? And so what he said is, we are going to take care of our employees and do the most we can do for them. And in return, they're going to take care of our customers and treat every customer like the only customer, which will then transfer over to the shareholders. And so, like you said, Dr. Spodak, they invest in LiveOak Bank employees like no other. We got a beautiful gym down here, 100% healthcare benefits. We got a few restaurants. They are going to pour everything.
You're like, I just love this stuff because, I'm the guy that, had free lunch for every team member and went through all that. So where are y'all located?
We're located in Wilmington, North Carolina. down here by the beach.
So it's one location, it's one large building?
One location. We have 4 buildings on campus right now, about to build our 5th. And we have coming up on 900 employees. And so
it sounds like Google of banking. So you got a gym, you got restaurants. Tell me about that. Like, are the restaurants free or reduced or what?
They're heavily subsidized. But the whole thought process, like I said, is giving back to the employee so that we can go in return, give the best to our customers, right? So if we have an employee, if you're enjoying coming to work every day, you're going to give it your all, right? And that in return gives you a good culture, right? And a culture that you can grow and scale with, because, hey, we're reaching 900 employees right now, soon to be 1,000, soon to be 2,000. But at the end of the day, we got to remember who's the most important. That's the customer. So being able to invest within your employees is going to give a great end result.
That's a good point. Honestly, we talk about culture a lot, as you know, Chandler. You were at our summit, and so you saw some of the content. We talk about stuff like that, and that is a rub. Like, right when you're below 10 employees and you're the operator, it's like really pretty easy to maintain the culture because you're almost involved in all those experiences. When you start getting into the 40, 50, 60 employees, 900, it becomes something that you better have a method to, right? There better be some systems in place that say, this is what we're going to do at these levels, because it gets harder and harder to maintain that control and harder to manage, employee satisfaction, which, to your point, transcends to the patient experience or the customer experience, right? So it's vital. It's not just it's fun and it makes more business sense and all this stuff. It actually transcends to the experience of the patient or the customer. Therefore, it has tremendous value. I know I'm stating the obvious. Right. Sometimes it's nice to hear that, right? Like, why is the culture important? Because sometimes people almost put it in the bucket of like marketing, right? And it's really not. I mean, I guess it is kind of a grassroots kind of marketing on the ground level of your practice, because people tell people about the experience they had, full stop.
Yeah,
right.
Absolutely. No,
don't you find it unusual though, Peter? Don't you find it unusual? There's a bank that does that though, because like not
really. I think all smart business, agnostic of the industry, is having to pivot that way, especially with the work from home movement that happened during COVID. Getting people back into the office isn't the same way. There's not this metaphorical gun to the head. You better come back to work. So you have to create an environment that is superior to the experience at home. Otherwise, people are going to fight you tooth and nail. So I think that was a silver lining for COVID, is that it made everyone up their games a little bit.
And it was, I think, the big push for the Great Resignation. It wasn't just about pay. It was about like looking holistically at your life work, at your life at work rather, and really examining it. Maybe not going back to that same job because it didn't have meaning, it just had money, or didn't have the gym or the restaurant or whatever else that you're offering.
Yeah, we'll pivot. I know, Chandler, you didn't want to come on here and be our culture ambassador, but I do. And I want to use your knowledge to get back to not dollars and cents, because I think, to Craig's point, there's a little bit of fear in the streets, especially because we as dentists, we as humans see headlines that say, oh man, another 75 basis points, another this, right? And in that short amount of time where the Fed is desperately trying to reel in this massive inflation, and look, it's going in the right direction right now, right? But when they're massively trying to reel it in, they only have one other lever to pull. That's the aggression of pulling in basis points, raise the interest rates to slow down, to cool down the environment. But to Craig's point, historically, it's still crazy low, right? Like, I actually grew up in the time period of Nixon and Reagan in those times, right? I mean, granted, I was a baby, but shit, we had 20% interest rates, at certain points. I mean, it peaked at 20% interest rates, and people were still, good businesses were still able to borrow money and grow. So dentistry done right still beats that from a yield perspective, meaning that if I'm going to borrow $100 worth of capital, I should be able to have a yield greater than 20%, even if we were at 20% margins, right? Not to mention the tax advantages of taking money, the expansion, things like that. So I think my point is, and I'm going to land this plane here, so bear with me. And I think you actually even mentioned it. When we were at 3, does it make that much more sense when you're at 5 to expand? Is the delta on that money that much of a catastrophic difference? The answer is no. Because if your foot is on the gas, your foot is on the gas. Would you agree?
I would agree with you wholeheartedly, right? Like, that delta can you produce that much more? 2%
Right.
more?
The
What's
2%
yield?
is almost a rounding error sometimes in like your P&L of like me, not really, but like meaning the margins of dentistry done right has enough buffer where that becomes irrelevant. Now, if you're in the restaurant business or if you're in,
8% top
the
margin,
GPC market or, direct, consumer product, CPG market, like you don't have that kind of, consumer
Or
product
real
goods. You don't have
estate.
that kind of stuff.
Real estate where your cap rate's built into the
Real estate where your cap
rate.
rates, right? It's the direct analog, cap rate in, cap rate out, so to speak.
Yeah,
but also
lower margin businesses.
One thing to consider too, I just want to
Well, it's
share
the
my
arbitrage
screen.
game, like Craig's saying, right? You have to almost, they're saying, look, I can borrow money at 5 and I can yield 7 in this cap rate. Therefore, like my VIG is 2%. But like that makes a big difference because of the profitability of your investment, right? Risk versus reward.
Look at this chart though. For those that are just listening, you see a mortgage chart from 1971 through 2021, through June of 2021. And you see the median average, the median rate and how far it's been away. And we're still below it. I mean, maybe
so
not
in 30 in 40 years, the average, the median rate is 6%, you're saying, Craig?
Right.
So we're still below the 40-year moving average.
Right. And by the way, just for those that don't understand this, when you borrow at 6%, your interest on your loan is deductible against your taxes. So if your tax rate is 35 or 40%, you're actually paying 6% minus 35 or 40%. That's
and unlike your personal
borrowing capital.
And unlike your personal home, there is no cap on business interest.
Right.
In home interest percent caps out at, I think let's call it roughly $1 million of mortgage. After that, it phases out and you get no benefit. But in business, expenses are expenses and interest is an expense. So yes, Craig, I would totally agree with you. Not that you want to run that way, right? You always want to strive to lower expenses and increase top line.
But to Chandler's point, if it allows you to increase your business, then it's a no-brainer.
Right. In a tax abated environment, 100%.
Right. And then let's do a pivot too, because I know
your true cost. Hold on, let's stop there for a second, because I think we need to unpack that. Your true cost of capital is not it's not 6%, is what you're saying, Craig. Right?
Correct. Yeah. If you're at a 35% tax bracket, it would be 0.65% of 6%, which is 3.9%.
Well,
that's your true cost of capital.
I don't know if that's the true math on that, but we're
Chandler, how does that look? These are two dentists talking financial crap.
That's what I was going to say. Well, I feel like I got to go to the CPA.
Well, you're the guest listener all of a sudden, Chandler.
So I would say refer to your CPA or have a conversation with your CPA.
Okay, good disclaimer. Good disclaimer. That's how I look at it, though.
Yeah,
listen, if it allows you, if borrowing and expanding and buying a building or expanding your facility allows you to make more money, like that's a no-brainer.
Well, this is the advantage of running your own business. Right. These are the advantages that being a W-2 employee potentially doesn't give you. When you can borrow money and shield it inside of your ecosystem as an expense, that's pretty cool. Right. And these are the advantages that the government is saying hey, here's your reward for building and risking and hiring and employing people on our planet, or in our country. So anyway,
it's true. It's not
stating the obvious
loophole too. Yeah, but it's important because people think the tax code is basically, 1% what to pay and 99% what are government incentives, which most people call loopholes. Government incentives such that we don't actually want you to pay us. We want you to create opportunities, build things, hire people, buy stuff. And that's what I think a lot of people don't understand. At first, you think about your salary and what you're making. And I think this is the reason why many dentists reach the age of retirement and don't have the ability to retire, is because they look at their wages and they don't really look at their assets. And borrowing money is a very interesting thing. For me, it's amazing that you don't have to pay tax. If I wrote either one of you a check, there's a tax implication. If a bank gives me money, it's tax favorable and there's no taxation on that money being used. So it boggles my mind why more people don't do it. And I think it's just because the financial literacy in our country is so unbelievable that debt is just all bad. People conflate business debt and debt on assets with credit card debt and getting in the hole because, it's just pounded into our head that debt is bad. I do want to make a turn though, Chandler, because I am the
Mhm.
recipient of a government subsidy. Maybe
Mhm.
many people didn't know that. So when I set off to build my building, it was a very large multi-million-dollar project. And traditional banks would have required 20 or 30% down. And I physically could not do that. That would have been over, maybe $2 million. So I went and got an SBA loan. It was a 701 loan.
Yep.
Am I saying that correct? 701?
Yeah,
There's 504,
it would be
701?
7A loan
7A, sorry.
and 504.
Okay. Tell the listener what these amazing, valuable tools are and why they're compelling for a person that wants to start an owner-occupied building. I'd love listeners to hear about these programs.
Yeah, absolutely. So maybe I'll start back with kind of square one to educate. So the way that I explain this is almost like two schools of thought, right? You have conventional lending and you have government guaranteed lending, right? And so there's a lot of bankers in the space that do conventional lending really, really well, right? Startup financing, acquisition financing, there's a space for that. But when you start to get into large ground up construction projects, owner occupied building purchases and remodels, government guaranteed lending starts to make a lot of sense. 504, 7A. So just like you stated, right? So people or clients out there are kind of like, hey, is there the ability for me to get into ownership without having to put 25 or 30% down? Right? I got a mortgage. I got student loans. I have kids, right? There's no way that somebody's going to be able to go provide me financing for $2 or $3 million, $4 million to build my dream facility. So it's an educational thing, right? Where there is an option out there, right? And it's through the SBA, it's through the government loan program. So here at LiveOak Bank, that's what we are specializing in. There's other lenders that do it across the country, but what that affords the doctor that is looking to expand to go from 4 ops to 5 ops in a leasehold facility, instead of going and continuing to pay a landlord, why don't we go and finance an owner-occupied building and get them real estate ownership? Tax advantages. You're creating wealth. And you're doing it safely and affordably to be able to grow your revenues. Kind of back to the point of what we were speaking about before. Anytime that you can take on debt, at a reasonable level, reasonable rate, that's going to help you grow revenues and make more money, that's good debt. That's good debt. So these are the programs out there in the government guaranteed world. The 7A allows for 100% financing for building purchases, ground up construction, and a multitude of things. But that's where I think they are best fit, along with the 504. That's helping with owner occupied commercial real estate.
Yeah, there's just no way I would have ever been able to have done what I did without that program. I just know it. There's absolutely no chance. And I don't know about other countries, but when I talk to friends of mine that are in, Brazil or in Europe, the fact that there are abilities to lever capital and never mind government-backed programs, that is like the core of what's great about America. Because you can take someone and allow them to bootstrap it like that, but no one would have taken a chance. I mean, no bank would have had that exposure. Peter, have you ever done anything like that? No, you've never done any SBA, right? No.
Never done that, no.
And it's not a fit for everyone, right? I mean, there's multiple financing options out there, but less money down, larger projects is usually a better fit. The government guarantee obviously provides the bank flexibility to go out there and lend on different types of terms. They're going to be a little bit more flexible. So, we're hopefully providing the American dream every single day here at LiveOak Bank and the healthcare division, and as the bank as a whole. All right. I mean, we're creeping up on $9 billion in assets and doing $4 billion of originations a year to small businesses all across the country, 28 to 30 million small businesses, which are the backbone of the economy. Yeah. So this access to capital and education is important.
Statistically speaking, I mean, there's an overwhelming percentage of people that are just employed by small businesses. I think the majority of people are employed by small businesses. So, I mean, it makes sense that the government has a program like this. And I hear a lot of chatter like, oh, you don't want to do that. There's high fees, there's additional fees associated with the closing costs and stuff like that. I'm like, what other choice do you have? Like for me, it's like higher fee or not pursue my dream.
That's exactly right.
So that's awesome.
That is awesome.
One of the things that I think is also a big thing that I want to talk to the listeners about as well is that dentists were really loyal people. We appreciate people being loyal with us. We don't appreciate when people negotiate with us. So if you say, hey, Mrs. Jones, you need 2 crowns in the filling, how about 1 crown and 2 fillings? And why don't we do it for half? And I'll pay you up front. Like, it just rubs us wrong because we're medical professionals and we really value long-term relationships. And I think it can come to our detriment as well, because we may have that banking relationship and the banker, may have been your banker for 10 or 15 years. And he slides that 9% interest rate across the table. And I've stopped probably about a dozen people from saying, hey, I know this guy's a great guy. Can I just make an introduction to you, just to a friend, and then save massive amounts of money? I think real estate people, a lot of more seasoned business professionals, are really savvy to understand the implications of a rate and to shop. I think dentists, unfortunately, don't shop rates. I've had it so many times. One of our masterminders, Peter, just reached out. I forwarded the email to you. Was telling him that to shop the rate back in September. He's doing it now, but still, it's like we have an internal barrier to wanting to not be loyal and respect relationships. And this is business. You owe it to your team and your practice and your profession. I mean, your professional life to make sure you're getting the fair treatment. Have you seen that, Peter? Like with your friends and stuff?
Not really.
Oh my God, I have so many people like that. They go to the big banks and then specialize and they get crushed on rates. Crushed. It's probably your friends are more sophisticated.
Yeah. Well, look, I mean, as you know, I mean, the more developed you get in business, the better those relationships get, the better those, like there's preferential deals. And, so yes, you are right.
Yeah, you're a good example of that. Peter portfolioed all the stuff and you started getting really favorable treatment.
Well, because I have a lot to cross collateralize, right? So, I mean, it makes me a safe, quote unquote, safe. So, I mean,
yeah, but getting in the game early is the key. So you have to get in, you have to own some assets. Those assets have to get paid down. And that's when the sooner you can get in the game, the better it is. Like you and I have had better treatment over the last 3 years because of our history, getting in, even if that's your first home or any asset purchase. So Chandler, do you guys do any personal lending as well? Like
we do not. We do not do any type of personal lending. We're just doing small business focused. Anywhere from $350,000 up to about $7.5 million on our SBA side. And we have some other divisions, USDA, which is another government guaranteed loan lending program. And then we've kind of gone up market in the conventional world, but we would consider lower middle market companies with 2 million to 5 million in EBITDA. So those are going to be some larger credit facilities on that side, but no personal.
Are you guys doing exclusively medical still, or are you mostly dental, or still mostly vet?
So our healthcare division, which was started up in 2010, I would say 90% of it is to dentists all across the country, looking to do.
We took out the vets.
And we were actually
the veterinary market.
That's right. Well, the vet's still here. The veterinary business is thriving and alive. They're doing really, really well. Just a ton of competition in that space. Smaller market, right? I mean, I think there's probably 200,000 independent dentists out there. Obviously, there's consolidation going on in that market as well. But on the vet side, I think it maybe is half of that veterinarians out there. So not as big as a total addressable market for lending.
And I think more consolidation too.
And more consolidation from the Mars of the world, right? To roll them up. Yeah. Private equity is in that space. It's also in the dental space as well. But that is one of that was our founding vertical. They're doing really, really, really well. Second to us, probably for a number of loans and largest portfolio size on book here at LiveOak Bank.
Cool.
So how?
Can you tell us?
Yeah, go ahead,
Peter.
No, I was going to get people in touch with LiveOak because I think it's a great relationship to kind of use, especially when you have specialized industry knowledge, right? Meaning about dentistry or stuff like that. So yeah.
I have a question, Chandler. Do you do like pro formas, like dental pro formas? Do you dive deep into the business aspects of what can be expected? Do you do that stuff, or is it not that deep for what you guys do?
Yeah. So on the startup side, right, when we're looking to finance startups, which is not our bread and butter specialty, again, there's larger banks out there that do that day in and day out. You fit within a certain credit box, you're going to get really, really favorable terms for a startup. If we do a startup, yes, we're going to look at pro forma and projections intimately, right? Because that's super important. When you're doing an expansion project, which we focus on mostly kind of like what you did, Dr. Spodak. Hey, I'm going to buy a building and I want to grow. We're going to look at projections And a interesting fact is that since our healthcare division has been around since 2010, we've helped over 2,000 clients and done over 2.4 billion to the industry.
Just dentistry?
Just dentistry. Just dentistry. Yep.
Huge.
Our average client on book sees 20 to 25% growth in the first year after relocating to that new top line growth after relocating to that new facility. And that's just average.
And I'm sure their projections were more anemic than that.
That's right.
I'm sure That's awesome.
That's right. So I think that's a cool, interesting fact about LiveOak Bank and just about our clients and you know, why we specialize in commercial real estate and ground up construction. That's a pretty cool fact for doctors looking to continue to expand and grow. And right now, where we get back to, it's still a good time to borrow money.
Yeah, it really is. I think it's so important to think about that.
I think that's full circle, kind of where we started.
Yeah, full circle.
And it starts on that thesis and ends on that thesis.
That's right. That's exactly right.
Yeah. And listen, as Peter loves to say, history will prove one of us right. But borrowing now, everybody's looking in the rearview mirror and saying, I could have got that 3.54%. I think you'll be saying, geez, I could have gotten that 6% or 6.5%.
Well, look, you have the data though, meaning, you know, you pulled up that chart that says like, look, it's still below the 40-year moving average. So like you are still in the right? You're still below that moving average. So anyway, Chandler, thanks for spending time with us today. How would someone get in touch with you personally if they wanted some like bulletproof treatment?
Yeah, absolutely.
VIP.
So
you got to treat all our people VIP.
Hey, absolutely. I understand that. Treat every customer like the only customer. So I would love to provide my contact information. So my phone number and my email address. And if we wanted to share it to your we can
put it in the show notes. I guess
Bulletproof groups, the mastermind.
Yeah, we'll do that.
I think that would probably be the best way, just so you're getting that type of treatment, right? I'm not clicking on a landing page and then somebody's going somewhere and it's going to take a few days.
Getting lost in a funnel.
So having my phone number, my cell phone, and my email address, I think is going to be the best way.
Cool. We'll get
and
it.
You're Chandler at LiveOak Bank, correct?
Yep. So it's going to be Chandler.Wrightenberry at LiveOak.bank.
Okay, right.
Wow.
Okay, we'll make sure to share that with you all.
As well.
There's more than one Chandler.
Awesome. Yeah, well, 900. Yeah, I just thought about that.
There's a lot of Chandler Wrightenberries too.
Yes, really?
Yeah, I'm sure there is.
No,
I was like, man, is that like a name?
I don't think it's a common name.
All right, pal. Well, I appreciate your time
today.
I appreciate your time. Thank you so much.
And we appreciate you being at the summit, man. It was great. You were there answering tons of questions, and you were immersed in the entire event.
Brought good energy. Yeah, it was good.
Yeah.
It was good. Thank you for that. You're right.
It was a wonderful show. Looking forward to it next year. You guys put really, really good content together, kind of like we spoke about earlier. There's so much information out there. Where do you go? Where do you start? Where do you begin? You guys did a really, really good job over 2 days of bringing people back down to earth and educating them on what's important. So I appreciate the invitation, and hopefully we'll be there again next year.
Yeah, man.
That'd be great.
All right.
Thank you.
Thanks
everyone. All right. Take care. Bye-bye.